Hello and welcome to another edition of the Friday Market Update. Hope you had a great week. Well, we got under and stayed under 7% this week, just barely, but we're going to take it. So CPI, the Consumer Price Index, inflation data came out a little bit better than expected, with the core CPI dropping down to 3.4% from 3.6%, still quite a bit above the Fed's target inflation of 2%, but we're making progress. What also helped mortgage rates is the Fed has started to buy mortgage securities again, which should help stabilize the rates and potentially keep them moving downward. And it also appears Wall Street traders are jumping in and buying as they are anticipating that they can get a better deal now with higher returns. So those two things combined, hopefully, will continue the trend downward. Now, momentum has a way of taking hold, and many times markets move due to the changes in direction. While it has definitely been choppy and a bit of a roller coaster, it does appear we are headed down that track slowly but surely. Personally, I do not see any big drop in rates. Rather, I think it's just going to be a long, smooth downward trend. So this should help the market not become white hot. So if rates were to drop too quickly, property values certainly would jump up very quickly, and we just don't need that. There's not enough homes, so we don't need this white hot market. So home buyers are definitely easing back into the market. They're starting to get used to these elevated rates and accepting that they will likely have to pay a premium in their mortgage payment to get the house that they desire. As the media starts reporting lower rates, more home buyers will go, oh, maybe I should jump in the market now. I hear rates are getting better. So I believe there's still a window for home buyers sitting on the fence to get in before the jump in home prices. I do believe that's going to happen down the road. Barbara Cochran also believes that if rates drop, they're going to jump. So those waiting for home prices to drop, it's not likely going to happen. Pulsenomics, in collaboration with Fannie Mae, predict home prices will continue to rise over the next 5 years. And this is a compilation of predictions from 115 real estate experts from throughout the country, including educators, economists, banks, mortgage bankers, and other real estate experts. Now, these experts on a whole, on average, predict real estate values will rise over 20% the next 5 years. So about 4% per year, some as high as almost 39%. So in my daily mortgage consultations with home buyers, we discuss current interest rates and what the payment will be at the current rates. On a conventional $400,000 loan amount at 7%, principal and interest is about $2,661. Now, if rates were to drop 1% down to 6%, their new principal and interest payment would be $2,938, a difference of $263. How long will it take for that to drop? We don't exactly know. My prediction is about 12 to 18 months. So we then review the history of rates. So we go back to the 1980s, and there's a lot of ups and downs over that time, but there was a trend there from 2003 to 2008. Mortgage rates were pretty steady, generally ranging from 5.5% to 6.5%, according to data from Mortgage News Daily. Now, I believe when inflation settles down to a reasonable level, interest rates will be in that same range. Call it 6% for a standard 30-year fixed rate conventional loan. FHA and VA will be lower. They always are, typically about 0.5% lower than that. So if rates were to drop in 12 months down to that 6% level, the home buyer would pay $3,156 more in their mortgage payment, a little bit of a premium because the rates are elevated during this time period. But what do they gain? This is where we go through and determine what they gain. So if the value of the home goes up by 4%, which is predicted by Pulsenomics, on a $400,000 value for simplicity purposes, the equity gain would be $16,000, okay? Not to mention that they would have paid down the mortgage by another $4,000 for a total equity gain of approximately $20,000 over that 1 year period. So you tell me which number is higher, the $3,156 premium that they pay in their mortgage payment during that year, or the over $20,000 wealth gain by appreciation and reducing the principal balance on their loan. So getting your buyer educated on how buying a home now can truly benefit them long term will help them grow their wealth. It's difficult for buyers to understand the financial numbers unless they can actually see them and truly understand and get educated. So as always, feel free to reach out to me directly to get your buyers pre-approved and educated so they can make the right decision for them. You can also send them to my calendar link where I will go through a free CIA, credit income asset analysis, so they know exactly where they stand now and what they need to do to get into a home. So let's run their numbers. Hope you have an awesome weekend, and we'll see you next week. Happy Father's Day to everybody. I'm super happy I'm a father, and I'm going to enjoy having my time, and I'm going to watch a little golf. So this is Gaylord out. Talk to you soon. Bye-bye.